Apologize, we had the internet connection, but we're up and running once again. So, like we were saying previously, now we have had 4 out of the 5 inflation releases released within the market. So, we have, of course, the CPI, we have the PPI. Both will have the standard and the core release, and then we have towards the end of the month the PCE price index as well. Now we've had 4 out of the 5. 4 out of the 5 inflation rates have come in not only higher than expectations, but actually much higher than previously expected. So we have to, of course, take that into consideration. Now, because we've had higher inflation, the possibilities of an interest rate cut, not only in March, which is the next interest rate decision by the Federal Open Market Committee, but also in May, the chances of there being a decision that interest rates will be cut, even if it's going to be a slight decline of, for example, 25 basis points, is not a very strong and high possibility at the moment. Now, because of this, the way that investors and institutions are exposing themselves to the market has significantly and very quickly changed. So we're going to start off by looking at one of the most traded currency pairs, not only amongst the major currency pairs, but generally speaking, across the financial trading markets, is of course the euro against the US dollar. Now, we can see that since the announcement, ladies and gentlemen, if I just measure the decline of these very strong bearish candlesticks, we can see the price has declined only within the space of 9 minutes by 0.32%, one of the strongest declines that we actually have seen since the CPI announcement took place 4 days ago. Now, if we're going to start looking at technical analysis, we really need to look at what indications we are actually receiving, both in the short term as well as the medium term. So that way we are able to get to both sides of the story and ensure that we're not getting conflicting signals. Now, if we look at the euro against the US dollar on the 2-hour time frame, I've got two indicators on my chart at the moment. I have what is known as an exponential moving average, which is given an average price, but it's given more importance to the latest price movements. Here we have a 75-bar exponential moving average. And here at the bottom of the chart, we also have an oscillator on a 20-bar period. Now, we can see since the announcement actually took place, we can see that the price of the exchange rate has dropped below the 75-bar exponential moving average. And in addition to this, we can also see it's dropped below the neutral on the RSI. So when we're looking at the RSI, we have 4 areas to the oscillator. We have above the 75, and if we are above the 75, it's given us an indication that the price is too expensive. If the price is too expensive, then of course there's 3 different outcomes which we potentially can see based on the indication. The first one is, of course, the price very simply may lose momentum and start to move in a sideways price pattern. The other potentially could be a retracement, which is a smaller price movement. And the third is a full correction. Now, at the moment, a full correction, ladies and gentlemen, will actually indicate the price is going to decline all the way back to the previous low here. Now, like I said, we've seen a switch in the indicators which are being provided by technical analysis. Previously, yesterday, and so far within the day's first 2 trading sessions, the Asian session and the European sessions, we have been getting buy signals. And to be honest, there have been great signals because most of the price movement has been increasing in value. Now, the other thing though, ladies and gentlemen, now is of course that the signals have significantly changed. It doesn't mean the indicators were previously incorrect. We have to keep in mind that the price is being driven by something which is fundamentally changing the outlook of the market. Now we've been getting sell signals at the moment. Now, when we're looking at sell signals, even since the signal has taken place, we've already seen the euro against the US dollar decline by 0.21%. Now, at the moment, we're getting both uh, the oscillator and the moving average giving us indication of sell signals. What we do also need to do is check to see if we're getting similar signals, ladies and gentlemen, from smaller time frames and other indications as well. Now, when we're looking at the Fibonacci, I'm drawing the Fibonacci based on the whole swing which has so far been formed. I'm using the low which we saw on the 14th and the high which actually fully formed yesterday. Now, based on that Fibonacci, a retracement still is possible, ladies and gentlemen, even if the price is going to decline to the 61.8 mark. So if it's going to decline to the 61.8 mark here, which, ladies and gentlemen, is exactly at the 1.0728. If it's declining to that area but is unable to break below it, then we still have a possibility that the upward price movement will continue. But if we're going to decline and maintain momentum, and keep in mind, it's still very early on, the announcement has only been made for 13 minutes. If we decline below that level, ladies and gentlemen, then of course the price can aim for a full correction. So keep in mind, if we maintain momentum, if we decline below here, then the next target here is all the way down to 1.06943, as you can see on the chart. So in other words, it will be a full correction. It will be a further decline of 0.32, which of course 0.42, ladies and gentlemen, for anybody who's looking at term trading, anybody who's looking to enter, earn a quick profit and exit the market, of course, is more than enough price movement. So, ladies and gentlemen, we've established the euro has a high possibility of declining against the US dollar. It's declining, the euro increasing against the US dollar and the US dollar declining. Declining US dollar, of course, is understandable considering inflation was higher than expected. Core inflation, particularly, was extremely, extremely high. And if we're going to look at the producer price inflation, the core producer price index came in at 0.5, so more than 5 times higher than that expected within the market. And of course, that's likely to make inflation more sticky within the coming months, not only within this month. And of course, the producer price index as well came in at 0.3. So we've got high inflation this week, ladies and gentlemen. We've also got retail sales, which was released yesterday, come in extremely poor as well. So we've got signs of cracks within the economy. We've got signs of weakness, even though it's still a resilient economy. And at the same time, inflation is not moving down to the target as quickly and as consecutively as we would have previously liked it. And because of that, we are seeing strength in the US dollar because interest rates are likely to remain higher for longer. Now, in terms of how long they're likely to remain so high, it would depend on future interest rates. Would depend on future inflation. But based on today's producer price index and Tuesday's consumer price index, it's definitely not going to be in March, which is the next Federal Open Market Committee's decision, and there's a very small possibility of it being in May. Whereas previously, there was a small possibility of it being in March and a very high possibility of it being in May. At the moment, there's virtually no possibility for it being in March and a very small possibility for it being in May. Now, if we're going to switch on to smaller time frames, so for example, if we're going to start looking at crossovers, ladies and gentlemen, we can see that 15 minutes ago, the latest crossover was a downward crossover, which isn't a conflicting signal. So we've got a signal here on a 30-minute time frame that the price is going to decline. If we go on back to the 2-hour time frame, we've got both signals here indicating that the euro against the US dollar is going to decline. What we can also do is switch to an even smaller time frame, especially for those individuals who want more short-term signals. We can also see, again, the latest indication is that the price is going to decline. Now, of course, what we can do is use a further breakout to indicate to us when the continuation of the trend is going to continue. So for example, what we could do is use this breakout level here. This is one option. If it breaks below this level, then we can take into consideration if the price will continue declining, and would deem that as a sell signal. The other possibility, which we also have, especially for individuals who don't want to trade at the breakout but want to trade slightly before the breakout, is they can measure the retracement based on the Fibonacci and trade as it breaks below the 61.8 rather than trading at the breakout, which means you're most likely going to trade about 4 pips before the actual breakouts, actually 0.05%, so almost 6 pips, ladies and gentlemen. Now, of course, we've got a lot of scalpers because we have very competitive spreads. If we are looking at scalpers, then of course, 6 pips or even 5 pips is extremely, extremely important. So even somebody who wants to trade the continuation of the trend, instead of trading at the breakout, in which case they missed quite a lot of the price movement, instead of that, like I said, we can measure the retracement upwards, the slight pullback, and trade at the breakout of the 61.8, which will be at this level here, ladies and gentlemen. But so far, let's have a very quick recap. Crossover on the 30-minute time frame indicating downward price movement. We can see a lot of volatility here, ladies and gentlemen. Even before the announcement, we saw quite a lot of volatility as well. 5-minute time frame, again, it's indicating a crossover. We can see the latest crossover here. In addition to this, ladies and gentlemen, 2-hour time frame, we're trading below the oscillator. The oscillator is currently trading at 47, and we're also trading below the 75 bar exponential moving average. Now, what we're also going to look at is our regression channel. So this, ladies and gentlemen, is a regression channel, which is formed out of, so I've got a few questions here, so let's quickly look at this. So I've got a question about if the price is overbought. What we can do in regards to that is look at oscillators. So I will look at that in a moment to give you some indication of if the price is overbought. I've got another question here. What are the expectations for next week? Ladies and gentlemen, as long as we remain below the 75 bar exponential moving average and below the 50 on the RSI, if we're remaining below these two major significant points in the market, then this is giving us signals that the expectation for next week is that the price of the euro against the US dollar will decline. But keep in mind, this is a big if these signals continue. So we have to keep that, of course, in mind. Now, if we go back to the regression channel, so this is a free zone regression channel. Now, it's formed from the correction zone here, which is the blue zone, the retracement zone, which is the orange zone here, and then the trend zone, which is the yellow. Now, ideally, if we're going to see a trend and we're going to see signals, then what we want to see is the regression channel widening and the price at least being in the trend zone of the regression channel, if not in the trend zone, ideally below the regression channel. If we are going to be below the regression channel, then that's where we're getting the strongest signals. And I can give you an example of this, a past example. So for example, here we can see the regression channel after this line really starts to widen and point downwards. In addition to this, we also, of course, can take into consideration that the price is trading below the regression channel, which really gives us an indication of the sheer momentum of the downward price movement. Now, of course, this indication here, just to give you an example, we saw that the price continued to decline for another 0.75%. Now, ladies and gentlemen, we've got the price declining again below the regression channel, which is a positive, but we're still having crossovers on the regression channel. So you can still see here, we're not seeing yet a widening of the regression channel like we saw here. Now, of course, we've only had the price movement now for approximately 21 minutes, 21, 22 minutes. So still very early on because this is a 6-hour time frame. So of course we have to look at other time frames as well. But what we definitely can see is that the price is dropped below the regression channel. Regression channel is still pointing downwards. It's just that we ideally want to see the regression channel widen. And if so, ladies and gentlemen, then of course we are getting indications of a continued decline of the euro against the US dollar. And of course, we can see, like I said, this orange level is the retracement zone, and we can see we found resistance there, and we found resistance again there today. So we have to, of course, keep that into consideration. But I'll switch on to another time frame as well. So here, if we're switching on to a 1-hour time frame, we can see we drop below the regression channel, but though we have to also take into consideration the regression channels pointing upwards. We want the regression channel to point downwards and to be widening. So for example, this is a good example here. We've dropped below, but we want the yellow side to drop below as well and start to widen downwards. That's where we're going to get the largest downward price movement. So this is something, of course, we're going to be monitoring. If the price is able to maintain momentum below this level, and if the trend zone drops below and we get a widening regression channel, that's where we're really going to get an indication of further stronger price movement. Now, Fibonacci, ladies and gentlemen, if we're going to draw the Fibonacci line on the latest downward, on the latest downward wave, so we can get potential targets, ladies and gentlemen. Bear with me. So we've got our Fibonacci level here. We can see the next target, ladies and gentlemen, if we're going to see a downward price movement, is here at the 1.07021. This is a short-term target, ladies and gentlemen. So of course, anybody looking to trade in the next 24 hours. However, even taking that into consideration, it's still a significant decline. I mean, we're talking about a decline of 44 pips. So that's something that we can take into consideration. Now, I'm mentioning downward price movement because, of course, we're looking at indications that we've looked at so far, all giving us indications of downward price movement. Like I said, we're trading below the neutral on the RSI, and we're trading below the sentiment line, the price sentiment line. And so far, even though we've got some upward price movement here, we haven't had an upward crossover. So we have to take that into consideration. The latest crossover, which is this crossover here, is a downward crossover. But let's start looking at another asset as well. Let's look at how the stock market has actually reacted. So here we're looking at a 2-hour chart. We're looking at the NASDAQ, and we can see the price, even though we're getting a strong decline, ladies and gentlemen. Of course, we have to consider that the NASDAQ and the US stock market hasn't yet opened. The NASDAQ declined up to 0.71%, slightly retraced. At the moment is trading 0.5% lower. If we're going to look at other assets here, for example, we've got the Dow Jones, most likely going to be slightly less volatility. Here we saw a decline of 0.35%, and it's retraced back up to 0.24. Not a major pullback, with the S&P 500 most likely going to look something more like the NASDAQ. So saw a decline of 0.53, and it's retraced back to 0.35. So the asset which is seeing the strongest decline at the moment is the NASDAQ. Now, something we have to be cautious about, ladies and gentlemen, is of course there is a lot of demand for the stock market at the moment. If we're going to go and move on to a larger time frame, for example, here this is a daily time frame, we can see a very, very strong upward price movement. The demand for the stock market is extremely high. Yes, inflation has declined. Inflation is stickier than previously expected, and because of this, we are potentially likely to see some kind of retracement or potentially some kind of correction. We saw something similar to that here, ladies and gentlemen. So yes, we need to take that into consideration. But in terms of technical analysis, it is indicating a retracement, but only a short-term retracement. And retracement, according to technical analysis, will only move down to this level here. And of course, if we keep in mind, if we're going to move down to that level here, ladies and gentlemen, it also will be moving in favor of the traditional trend line as well. So even if we're drawing a trend line like this, it will be honoring that trend line. But we are trading above the 75 bar EMA. We are trading above the neutral on the RSI. On the RSI, the neutral is 50. We're currently just below 55. So it is, even though with this downward price movement, still seeing indications of upward price movement. But even with regards to indications of upward price movement, we are still seeing the possibility of there being a retracement all the way down to here. Somebody's asking how much of a retracement would that be? Ladies and gentlemen, it's a retracement of 0.49%. So it is a considerable retracement. But what people really should take into consideration is as the retracement forms and as the retracement declines, what it actually does is it provides an opportunity for investors and traders to enter at a more competitive price. So if we are going to see a decline, ladies and gentlemen, whether it's going to decline back to 17,800 or if it's going to decline back to 17,500 or whatever of the two it may be, it still provides opportunity for investors to enter at a more competitive price within the upward trend. So even though we are potentially going to see possibly a decline, and even though the announcement is negative for the stock market, and of course we also had negative data yesterday from retail sales. We had negative data as well from the consumer price index as well on Tuesday. Even though we are getting the demand for the stock market is, generally speaking, extremely high. We, of course, have the AI drive as well. Earnings are considerably high as well. We also have to take into consideration that next Wednesday we will have NVIDIA release their earnings data. They have beaten their earnings data consecutively quarter after quarter after quarter, been the best performing stock of 2024 so far, and also 2023. And they've got their earnings next Wednesday after market close. They are the fifth most influential stock within the NASDAQ. So if we are going to get more positive earnings data, like we saw yesterday from Applied Materials, which also beat their earnings and revenue data, then of course, even as we get a decline, we have to take into consideration, are investors going to re-enter the market, and will demand grow based on the more competitive entry point? So we have to, of course, take that into consideration, because even though we've got that downward price movement, it's still abiding by the short-term upward trend, which will form a correction if it does continue. And like I said, we're trading above the 75 bar EMA, and we're also trading above the neutral as well. I've got some questions here on gold. Of course, we will look at that 100%. Let's take a look at other time frames on the NASDAQ, and then we'll look at gold. So we can see a similar price movement here, ladies and gentlemen. The latest crossover is a downward crossover. If people want to get an earlier indication, because of course it's retraced back up, which is understandable. It will always retrace back up after a major announcement like this, because of course we get a lot of sell orders, a lot of downward price movements, and of course it takes some time for investors to get comfortable with that price before continuing to speculate in a certain direction. What we can do is we can switch to a 1 minute time frame, and you can see here the 1 minute time frame. Here we have now a scenario where we can use Fibonacci, and we've also got an upward crossover. So it doesn't necessarily mean to trade upwards. What it does though mean potentially is that we can wait for the next downward crossover. When we get a downward crossover, then potentially we can look at speculating the continuation of the retracement, if that's something we believe will take place. And what we can do as well is, of course, use the Fibonacci levels like this. If you use the Fibonacci levels like this, if the price is going to decline below here, then we've got an indication of a potential breakout and a continuation of the downward trend. If we're going instead, though, to get an indication of upward price movement, bear with me, we can use the Fibonacci levels like so, in which case, if we're going to cross above this level, we can look at a potential larger retracement to here, or we can look at a full correction, in which case the price can trade all the way back up to here. So that's also something we can look at as an alternative. Let's also switch to our regression channel. If we switch into the regression channel, we're still, ladies and gentlemen, even with the downward price movement, within the trends on the regression channel. So this is why I was previously saying, yes, we've got downward momentum. Yes, there is something there fundamentally driving the price down, but we have to be cautious because in the longer term, it's in a very strong upward trend, and we need to be cautious that we're going to be cautious if investors will take advantage of the discounted price. And when we're looking at the regression channel, we can see we found resistance. Sorry, apologies. We found support here at the exact level which was stated would be the retracement zone. Let's also look at gold. We had a member, a viewer, asking about gold. So the question is, what's your thoughts on gold? Do you think it will hold at the 2000 level, or do you see it going to 1978? So let's look at gold, ladies and gentlemen. So if we're going to look at the same setup with gold, something I will say to individuals is that on a 2-hour time frame, it's very clearly following a downward trend formation. So it is honoring the traditional formation. We've definitely got lower lows, we've got lower highs. The size of the bearish impulse waves are significantly higher, even when we're measuring the retracements, ladies and gentlemen. So for example, if I measure this retracement here, we're looking at a retracement of 0.91%. So that retracement there. If we measure the next retracement, ladies and gentlemen, we're looking at 1%. So 0.91 and 1%, ladies and gentlemen. Now we can see here, just by measuring the retracement, is that it's still keeping downward momentum. We're still following the traditional price movement and honoring previous waves. If we're looking at the latest two waves as well, the downward wave is here 1.15%. The next wave, ladies and gentlemen, is 2.15%. So we've got something that's to keep into consideration as well for the next wave, which is currently forming at the moment, if we are going to see a decline, of course. Now the question is it going to trade, if it's going to hold at the 2000 mark? Well, if we're looking at technical analysis, we've got indications that it is going to decline. So we're trading below the trend line. We can see even as we got upward price movement yesterday and some slight upward price movement today, we're finding resistance at that trend line again, like we saw yesterday and like we also saw on the 13th, and we also saw that throughout the previous week as well. We're still also trading below the neutral area of the RSI. We're currently trading at 47, which is indicating that sellers are controlling the market at the moment. Now, what individuals can also do is look at the report which is going to be released this afternoon, later this afternoon, where the US Futures Commodity Trading Commission will release the latest report on gold and give a clear report on how many new buy positions there are and how many new sell contracts there is. If there is a significant increase in sell contracts compared to buy contracts, then we can also potentially use that as an indication that gold is expected within the market to generally decline. So we can also use that if we're going to look at fundamental aspects of the market as well and look at sentimental analysis. But technical analysis here on the 2-hour chart is indicating a decline. In regards to how much potentially we are looking at the decline, then of course we can use our Fibonacci levels again. If we're going to use our Fibonacci levels, it is indicating that the decline can potentially go as far as 1,970. Let's switch on to another time frame. Let's look at both a 1 and a 5-minute time frame as well as a 15-minute time frame. So we're looking at all crossovers on the main three short-term time frames. Of course, on the 15 minutes, we've got the latest crossover downwards. The only thing I will say, though, ladies and gentlemen, is on the 15 minutes, we are at that significant level where it's a previous support level and it's a resistant level which has broken and formed a support level. So a resistance being flipped onto a support, which is a significant level in the market, because we can see we found resistance here on 1, 2, and 3 occasions, and we've now found support. So far on the second occasion, if we're going to decline below that, then of course that's no longer going to be an issue or an obstacle. If we look at the 5 minutes, we can again see the latest crossover is downward crossover, and of course we can look at the 1 minute to wait for the retracement to end and form another downward crossover. So we can see we have an upward crossover here. It is continuing to trade upwards, but the next thing that we're going to be looking at is when is it going to cross over downwards again. And like I previously said, we can use our Fibonacci levels to help us not necessarily wait for the breakout, because if we wait for the breakout, we're missing quite a lot of the price movement in the short term. But instead, what we can do is wait for the breakout of the 61.8 rather than wait for the breakout of the previous low. So instead of, ladies and gentlemen, of obtaining a sell signal here, we instead have a sell signal slightly higher at this level here. So because of this, ladies and gentlemen, you're actually able to enter into the market 0.10% earlier than you would be if you were following breakouts. So the idea, ladies and gentlemen, is not to have to wait for the breakout of the previous low, in which case you're trading very close to the end of the next swing. You're at that risk, but to actually trade before the breakout. But when there's enough downward momentum in order to obtain a strong indication of a future downward price movement. Now, what somebody can do, because the move, if we look at the 1 minute time frame, the moving averages at the moment, they're very close. So there's not a lot of momentum which is required to get a downward crossover. What individuals can do is use a 2 minute time frame, ladies and gentlemen, which would require a larger downward crossover. So you can see here, we're wider away in terms of the 2 moving averages to give a better crossover, a better entry level, of course, as well. And we also can keep in mind, in the ultra short term, we did see a slight pullback here. Now you can also use that pullback as a lower low, so an indication of downward price movement, because that would more or less also coincide with a downward crossover. Now, if we're going to look at a regression channel, let's have a look at a regression channel on the 1 hour time frame. The regression channel on the 1 hour time frame at the moment is neither getting buy or sell signals. We can see the regression channel has very quickly thinned, and all moving averages have more or less have crossed over. The only thing which is given a slight signal is that we're trading below the regression channel. But in order for a signal to fully form and be an official signal of a downward trend in the short to medium term, is we want the price to continue downward and we want the regression channel to widen. If we get a widening regression channel and a regression channel pointing downwards, and for the price to trade below the regression channels, at that point where we're going to get an indication of downward price movement. And a good example of that, ladies and gentlemen, is this here. So we can see the price is trading below the regression channel, is a widening regression channel, and it's widening downwards as well. So this is a good example of how we can get a signal. Let's go back to the 2 minute time frame. And we can see on the 2 minute time frame, ladies and gentlemen, we've just now had a downward crossover. So that is an active signal of a potential downward price movement. Now, why exactly? Again, let's have a very quick recap. Because we can see on the 2 hour time frame, we're seeing the same type of retracement upwards. So no significant momentum higher, indicating that buyers are going to start to control the market. We keep finding resistance at that trend line, as you can see here and here as well. We're trading below the 75 bar exponential moving average. Is a bearish candlestick. The previous candlestick was also a bearish candlestick, and we're trading below the neutral on the RSI. We're currently trading at 45. If we're looking at the 2 minute chart and we're looking at crossovers, the latest crossover is a downward crossover, took place 2 minutes ago only. If we switch to a 5 minute time frame, again, the latest crossover is downward. If we switch to the regression channel at the moment is neutral, but we're getting a slight signal because of the fact that the price is trading below. So keep that in mind as well. Now I've got somebody else who's saying if we can look at how the market is, how the announcement is affecting other currency pairs. We've looked, to be honest, ladies and gentlemen, at the euro against the US dollar. Something to keep in mind, the pound against the US dollar is most likely going to be looking very similar. So for example, here we look at the pound against the US dollar. This is the euro against the US dollar. The only thing that I would say is when you're trading against the euro, you want to be trading with the currency which is the strongest, seeing the strongest price condition. So when you're analyzing a currency, you want to analyze it with experience and expertise. You really want to look at it like institutions look at it. And the way institutions look at a currency pair is, yes, we have to view the asset as a single asset. It's a currency pair, is one asset, and we analyze that asset. But in addition to this, what we also need to do is look at both individually. So it's like we're analyzing three assets. We're analyzing the euro against the USD. We're also analyzing the euro, and we're also analyzing the US dollar. So when we want to trade when we want to trade in favor of the US dollar, we want to do so against the worst performing currency. Now, how can we understand the worst performing currency? What we can look at is other currency pairs. So for example, I can look at the euro against the British pound, not on a 5 minute time frame. Let's look at a 15 minute time frame. And I can see the euro is actually trading higher. So at the moment, if I want to trade against the US dollar, I'm slightly cautious about the euro. I'll prefer the pound. Why? Because it's weaker today. Now that's something that you're going to do, not just for today, but look at also the price movement yesterday. We're going to look at other currencies as well. So for example, would I rather trade in favor of the US dollar against the pound or against the Japanese yen, for example? In which case, let's look at the Japanese yen. So if I look at the pound against the Japanese yen, the pound is stronger against the Japanese yen. So again, the Japanese yen is a weak currency today. If we look at the euro against Japanese yen, again, the Japanese yen is a weaker currency. If we go to, for example, the Swiss franc against Japanese yen, again, it's a weaker currency. So we can see the Swiss franc opened here, and at this line is where we're currently at. So we're again trading higher. So the weakest currency, just by looking at just a couple of currencies, of course, this is something you need to do against more currencies. For example, here we've got the Australian dollar. Australian dollar is actually showing some weakness here. So we also can potentially start to look at the Australian dollar as well. So for example, if I look at the pound against the Australian dollar, the pound's slightly higher. We can see some weakness here in the Australian dollar. But this is something that you want to take into consideration. If we want to trade against the US dollar, we want to do so with the strongest currency at the moment. If we want to trade in favor of the US dollar, then of course we want to trade in favor of the US dollar, but with a currency pair which has a depreciating currency. So when we're looking at a currency and analyzing and evaluating how the price of the currency is likely to change, of course, we look at the currency pair as a single asset and evaluate it in that way. But in addition to it, we look at one currency as an individual asset and the second currency as an individual asset. So, for example, what we looked at here, ladies and gentlemen, is this setup here. So we're looking at this setup, ladies and gentlemen, on a 2-hour time frame. We're looking at a 75 bar EMA. We're also looking at a relative strength index, the oscillator on the 20 bar period. What you can also do is do the same setup on the US dollar index. And you want the signal to be the same. If I'm trading in favor of the US dollar, for example, the euro against the US dollar, I also want to see the same signal on the US dollar index. So this is what I'm referring to. You look at the currency pair as a single asset and you analyze it. But in addition to that, you look at the US dollar as a single asset as well, and you look at the counter currency as a single asset as well. So we have to look at that in a slightly different way, for example, when we're looking at the stock market. But even with the stock market, ladies and gentlemen, I'll share another screen with you here. We'll refresh the screen. If we go to the stock market, ladies and gentlemen, so here, for example, we're looking at the NASDAQ. Okay, this is something that we looked at today. The NASDAQ is made up of many components. It's actually got 100 stocks. Now, it doesn't mean those stocks are equally influencing the NASDAQ, because of course they're not equally affecting the NASDAQ. Some stocks have a higher weight. Now, what does that mean? It means some stocks are more influential than others. So here, for example, ladies and gentlemen, you can see it gives you which is the most influential stock. So for example, ladies and gentlemen, here we've got the most influential is Microsoft, then it's Apple, then it's Nvidia, and so on and so forth. So if we want to speculate that the price of NASDAQ is going to increase in value, I will look at the top 20 most influential stocks. And ideally, I would want those, or should we say most of those influential stocks to be increasing in value. So for example, if I look at the top 20, I may say to myself, I want 75% to be increasing in value. Otherwise, I will not look at opportunity in the short term to speculate that the NASDAQ will increase. If it's, for example, 50-50, okay, so if 10 out of the 20 most influential stocks are declining, I will not speculate that the price is going to increase. This is just an example, of course. You can use your own personal approach. But the important thing is to look at the components individually. Yes, we analyze the NASDAQ, but in addition to this, we analyze the components as well. So, ladies and gentlemen, that brings us to the end of today's trading session, live analysis. Ladies and gentlemen, of course, we have to take into consideration a couple of factors. Like I said, in a month, we have 5 inflation announcements. We have CPI, core CPI. Today, we had PPI and the core PPI. Then later on this month, we will have the core PCE price index, which isn't, of course, yet announced. Out of those 5 inflation announcements, 4 have come in higher than expected. 2 of those have come in much higher than previously expected. Okay, so we have to take that into consideration. And we also have to look at what does that mean for the stock market? What does that mean for investors' risk appetite? Because that potentially can not only affect the stock market, but other risk-based assets, such as the cryptocurrency market, which has performed very well over the past 2 weeks. So this is just something to think about before we end today's session. We looked at signals, we looked at potentially what may be happening within the market over the next couple of days and the next coming hours. Of course, the US market is about to open, so everybody has to keep looking at that setup because signals will change and change and change again. So you have to amend your approach to the market and the methodology, of course. So let's end today's session. Thank you for your attention. It was, of course, a pleasure. Hopefully everybody found it educational and informative. In the meantime, trade safe, trade responsibly, and hopefully we'll see you very soon on our next webinars. In the meantime, goodbye and enjoy the rest of your weekend.